What's up, guys? It's January 24th, 2024. Pretty good day. It was an inside day, which is a little more rare. The Bears made money, but look how much the Bulls were also making money within the Bear channel, and Bulls got the close. So that's interesting. We had a big gap up, and something I haven't mentioned, I don't think I've mentioned in the past, but I just didn't think of it today, or I thought of it today, This gap up was a breakout bar, because if we think of gap ups, they're bars, and it broke out of the EMA. So that was it, just a little more context that this bar is breaking out of the EMA with bad follow through. But then they still got their 2-3 legs up. So it wasn't the worst, but it wasn't the best follow through, if you know what I mean. There was a trade, I guess is what the better answer would be. Measured move. The gap up would put us around 940, and that's also a measured move I have of Friday's breakout bar. So that'd be cool to see. Bar 1, bad follow through for the Bulls. It has bullish tendencies, and what I mean by that is it sold off and ripped up, but it's still a bear bar. It printed a bear bar with bullish vibes. Bar 2 is an inside bar, follow through for bar 1. Bar 3 is follow through for bar 2, and it is not an outside bar. It's a trend bar moving lower. It didn't close below the wick of bar 1, which means the market is range bound. So if this is the range right here, the market, this was the range, the low and high of bar 1. Bar 4, the Bulls bought range lows, which is also a pullback from the gap up, and they go for 2-3 legs up. Very shallow, weak 2-3 legs up. Here's leg 1. Deep pullback. We don't want to see a pullback completely testing this, but bar 7 was testing the high of bar 4, and then bar 8 ripped up for another move higher. Bar 9 is a pullback. Bad follow through for bar 8. Bar 10, we have an inside bar, and then a breakout bar with no follow through. Something's wrong with the bull trend. We can already tell, like, this is not good. This was a deep pullback. No follow through. The breakout bars are getting no follow through. The bars from lows got a little bit of follow through, but then no buying at highs. So the market has made a wedge top, and then they sell off for a couple legs down. And these are asymmetrical legs, so the legs I'm seeing is bar 13 and 14 being leg 1. The deep pullback, bar 16 and 17 leg 2, pullback, and bar 19 leg 3. This gives the market a double bottom appearance. I took this and ended up getting stopped out because I thought it was a double bottom bull flag. Here's that. It's kind of what I had drawn today. I'm pretty sure I bought this one, and then I got out as it started to sell. I was looking for a test of yesterday's high, and then another test of 90.40, just because that is the measured move I'm kind of eyeing. Where was that? Yeah, so double bottom bull flag, and that did lead to a profitable trade. It didn't hit my PT. So they got their messed up leg 1, leg 2. Asymmetrical is such a weird word for me to say. I don't know why. Here we have a leg 1, pullback leg 2, pullback leg 3. These are micro legs, by the way, because since these are all bull bars, this just could be seen as one leg, pullback leg 2. But I've been trying to read the market from that perspective, that this is a leg 1, pullback leg 2, pullback leg 3, pullback double bottom bull flag here, expanding triangle, and a breakout, a failed breakout. Once again, the breakout bar got no follow through at highs. Bar 27 tried to sell off, reaching the lows, but they failed, and it made a wick, and they didn't close below the EMA, so that's not good for the bears. This is more of a bear trap than a breakout because of the wicks and the buying pressure to the left. When bars, I don't know if you guys can hear that, there's like a car revving its engine outside. When bars 28 and 29 formed, it kind of looked like the market wanted another leg higher, but 29 had bearish tendencies. How bar 1 had bullish tendencies and printed a bear bar, bar 29 has bearish tendencies but printed a bull bar. What I mean by that is, so the way breakouts work is, a breakout is one candle breaking out of the previous bar's range by one tick. So this got printed a bull bar because it broke out of bar 28's high, but it sold off, creating a doji. And that was selling off against bar 12, so the context for this is good for the bears. It's not the best print though. It would be better if this printed bearish, but it didn't. It is what it is. 29 is a sell, and again another wick. Another wick. Bar 30, oh excuse me, I'm off by a couple numbers. This is bar 29. Bar 30 was another sell with a wick, so that was weak. And then bar 31 is the first time the bears get a gap bar below the EMA. Good for the bears, that's a breakout. And they go for 2 legs down. Leg 1. Oh, okay. It does get met over here, but it would be nicer if it, let me see if we could do it like this. Yeah, I was short, but I wasn't really feeling it today because this EMA, I think, really made things hard for the bears. Bulls were just buying the EMA. You can see every time we came close, bulls bought. Come close, bulls bought. We failed breakout by the bears, bulls bought. Bears go for another leg down, bulls buy. So I think the higher time frame EMA really put a stop into the bears' plans today. I know it did mine. I was a little bit irritated with these deep pullbacks. So there's a lower high double top and a gap bar. I think the context is good to go short for a few bars at least. We can see this bear this bear channel right here. Make it red. Lots of wicks. This is clearly resistance and it's going down. And then we have a failed breakout again by the bears with bar 37, and bulls go for 2 legs higher. See, there's more range bound trading today. Look, the first 6 bars of the day is a sell and then a buy back to the high. So it's expected to have more range bound price action. We can see 2 legs right here. Obviously they're not matching. Leg 1, leg 2. Let me draw it, it'll be easier. Leg 1, pull back, leg 2. This bar here, bar 43, it raced high. It surged like that. And then it sold off. At bar 44, it raced up and sold off. This is creating a head and shoulders pattern on a smaller time frame. 1, 2, 3. Head and shoulders just means one side tried to go that direction 3 times. So in this case, it'd be the bulls. 1, 2, and 3, and then they sell. Here's another double bottom on the flag. On the EMA. Be good for a scalp back into the EMA. It's a broad bear channel, so bulls and bears are making money. If it's a tight bear channel, bulls wouldn't be making money. If it's a broad bear channel, bulls will make money and you could scalp back to the EMA. However, if you can't tell, it's always better to just trade with the trend direction. Al always says, like beginners, we should just trade with the trend. So that's what I did today. Yeah, so you could also get long for a scalp into the EMA, scalp into the EMA. It worked every time. You could buy every dip for a scalp into the EMA, and eventually you would catch a breakout yourself. The EMA is acting as resistance, and one thing that made notable about what made it easier for me to hold my position, because I held through these pullbacks. I actually got out here, which kind of sucked. I gave back a lot, but look at the time the market is spending above the EMA. Lots of time, lots of momentum for the bar. Less time, even less time, hardly any time. So we can literally just check how long it took. So here, about 50 minutes, or you could say it's like a full thing here, about 2 hours. Then they spend 15 minutes, then they spend 5 minutes. That looks like 10, but there's this bar. So what I mean by that is it gives the appearance that the bulls are getting weak, and that's what I thought, which is why I held a little bit longer. And they were until we got too low, and they failed to close the gap, leaving a gap open. The bears failed to close this gap, and it left the bull gap open, and that's bullish pressure. I think this is a good one of these bars right here. You could buy this bar, or you could buy this bar for a scalp back into the open, because on range days, it's a good play to wait for an extreme, and then you can scalp it to the open. You could actually scalp any of these to the open. This went to the open. This failed, but if you didn't take profits, you could buy lower and you'd make money around here. We look at the bear legs too. They're also shrinking. We have a nice big bear leg. Then we have another bear leg here. And this bear leg, bar 46, it raced down, giving it exhaustion vibes. Pull back. And then this was really cool to see how the breakout is getting weaker for the bears. We have the pull back into the EMA with bar 51, 53, 54, 55, 56. The bars are getting smaller and smaller and smaller till the bulls take over with their own head and shoulders pattern. They get a pullback. They get their leg 1, leg 2 into the EMA. Here's that. It was met. And then we can extend this out here to here, or put it to the bottom. It was met. You guys see how it's starting to, leg 1, leg 2s are really coming together. I didn't take all these trades, but I'm always like, I want to just keep reviewing the day from a leg 1, leg 2 perspective, a market cycle perspective. Right now we are in a bear channel, and what happens in the market cycle? We have a breakout, a channel with legs 2, 3, and 4. When we get to legs 3 and 4, we should start fading. And that, since we start fading legs 3 and 4, that will put the market into a range-bound environment rather than a channel. So what I'm talking about is so what I mean by this is leg 1, pullback. Leg 2, pullback. Leg 3 is a better fade, pullback. Leg 4 is a better fade. And look, that puts the market into a range-bound environment. And when the market goes range-bound, as soon as we get the next breakout, it's a reset on the market cycle. So you can start to see how the pieces make sense when you have a leg 1, leg 2 with the trend, legs 3 and 4, fade it. However, in a strong trend or a strong channel, small pullback, bull trend, you will get crushed fading legs 3 and 4. So please make sure the context makes sense. The market is always moving within a cycle, so figure out the cycle and trade around that. You see the bulls got their breakout above the EMA for a few legs higher. It was a good, I did not expect that leg, but I think I just did this one. I saw this bar and thought they could get a measured move of it, and it looks like that's exactly what they got. Look right there. See? So lots of ways to frame today. So many trades we could have taken from, you could buy the pullbacks, you could short the highs, because remember, leg 3s are good fades. Leg 1 with a trend, leg 2 with the trend, leg 3 fade it and you make money. Leg 4 you'd have to wait. Leg 1, leg 2 failed. We're range bound, could be a second leg trap, and that's ultimately what it became. This wick is hinting something is not right. This wick was against this big bar, so that tells us right away, yo, what's up? What's up with this bar? If the bulls are so strong, why didn't it just keep going to forever and infinity? So yeah, really good breakout bars. These 3 bars could be on the 15-minute chart was strong breakout, led to another leg. This breakout led to another leg here. Something I've started to ask myself is, before I take a trade, I was like, is this move strong enough for a leg 2? And if I think it is, I just take the trade, and it's really easy to get out of a leg 2, because if the leg 2 is failing, that means it's not strong enough, so you get out. Like, for instance, if you're going to see, how do I do this nicely? Okay. Is this strong enough for, I'm looking to the right of my screen right here. Please draw your eyes here. Is that strong enough for leg 2? I think it is. It's a breakout below the EMA, and it's breaking out across several bars. Very little overlap, where these bars have a lot of overlap. Look, we got the leg 2. Now you got to ask yourself, is this strong enough for a leg 2? I'm looking at this as one full move. You could say like that. Is this strong enough for leg 2? You could say yeah, because they made money. They made 10 points. So that's range bound price action. But if it's also range bound price action, where's the high of the range? The high of the range could be the low of this breakout acting as resistance. Look how it closed. That was actually a really lucky line I drew. That's a little bit better. Something like that. Is this strong enough for leg 2? It kind of looks strong, but then if we ask ourselves, are these range or trend bars? These are range bars because the wicks are bigger than the body. Have this wick plus this wick is bigger than this body. This wick, oh, that was a bad drawing. I'm going to say this one. This wick is bigger than this body. So yeah, it's going higher, but how much strength is it if these wicks are here? Then I saw this, and adding it with the context, I was thinking about yesterday selling. I was saying, is this strong enough for leg 2? I think it is. And look, we got the leg 2. Now this is where things get interesting, because I also thought this was strong enough for leg 2, but then we can go leg 1, leg 2, leg 3. leg 1, leg 2, leg 3, leg 4. And what did we just talk about? Leg 3s and 4s are good fades in the opposite direction. Leads to a breakout. So, yeah. I don't know. I just kind of went off on a tangent on leg 1, leg 2s, but it's like we can really start to frame from trades and collect points if we can find these leg 1, leg 2 moves. I mean, here's a leg 1, leg 2 move. It had to be measured a little differently. We can do it like this too, and it would be met. See, it was met. I saw this bar race up, and it has little overlap. So, overlap. See how lots of overlap. This is the bar 70 is a bad bar. Lots of overlap. Bar 73. This is bar 73. Not a lot of overlap, and it got the second leg up. It got a breakout, measured move breakout. Go to the higher time frame real quick. So 45-minute chart on the right and daily chart on the left. Looks like the market is breaking out, and yesterday was nothing but a pullback. However, today was an inside day. That's not good. Inside bars are not good because I just don't like inside bars. No, inside bars are not good because if we're trading breakouts, this is a consolidation. The market is consolidating. It could go either way. I have this measured move here from Friday, so this is this bar. I was messing around last night and I noticed this. This is interesting. From this bar, the bar breaking out of the EMA. See right here. You guys are already catching on. I'm going to delete this real quick so you can see the lines. I'm going to delete this one. Let me delete that one. Look, so if we do 2R of this bar, if we do 2R of this bar, originally I was doing a measured move of this bar, but let's just say it's this bar. Look, it's almost met with the sell-off. See right here? That's why I thought was interesting yesterday, that this 2R of this measured move lines up a little bit better. I also played around like this. And you know, technically, you're supposed to measure the move until the first pullback. So that's around 5,040. Really interesting to see what we get. The 45-minute chart is looking all right. I'm going to reverse everything I just did real quick. Okay, so that's how it started. So here's the 45-minute chart. Really strong breakout. Oops, 1 second. Really strong breakout. You have a bull flag. However, the bull flag's not acting very good at highs. Stronger selling, but today's close really put a dampener on the bears. I thought bears would at least try and go for last week's high. And instead, the bulls kept the gap open, giving us a higher low on the EMA. And it's been a long time since we touched the EMA. So it'll be interesting to see what happens tomorrow. It's Friday. If you guys are seeing this, it's already Friday. I hope you guys had a good trading week. Hope you used your stop loss. This has been a little bit harder week for me. One day's been red, one day's been green, one day's been red. I ended up with a red day, doing something really dumb at the end of the day. I got out here, which gave away a lot of gains. I went short here, and as soon as it turned around, I got out. I was like, why did I do that? And I went short here again, thinking we were going to close on the EMA, because I was counting leg 1, pull back leg 2, pull back leg 3. And as soon as this bar turned up, this bar also gapped up, which really screwed up my P&L. It gapped up, and I was planning to hit out before, like, this bar, whatever. I was trying to hit out really quick, and I couldn't because it gapped up. So I did more damage than I should have right at the end of the day here, being stubborn. That's why I'm putting more emphasis today on fading third and fourth legs, because that was the mistake I made. So I want you guys to know, I'm not out here collecting crazy gains. I still have the accounts, though, so it is what it is. I've been thinking about taking it a lot slower. I might switch to the micros. I'm going to take this weekend to think about it, because I'm just not going to get this payout, and I don't care if I have to make $5 a day. I hope you guys are doing good. I hope you're using your stop loss. Thank you for the support. Welcome to all the new followers. I noticed more people are watching the videos and leaving comments. Guys, if you have any questions, please drop them in the comments. I'll do my best to get you the answers out the books or from the course, because that's just the best way to do it. Thank you for your support. I hope everybody has a good day. I will talk to you guys next week on Monday. Goodbye, everybody. That was so robotic.